In this video, I will explain my simplest trading strategy to stay profitable as a successful day trader. I have mentioned this trading strategy during many of my updates, and today I will go through a little bit more detail. I will also go through the rules that you need to follow, including risk management tips and tricks to apply to this trading strategy. So watch this video until the very end to start trading like a pro. Before we dive in, you need an exchange to trade on. My two favorite exchanges that I use to do most of my trading is Bybit and Mexi. A 20% fee reduction for Bybit when you sign up right now. Also $30,000 bonus depending on how much you trade and deposit. And Mexi, one of the exchanges with the lowest fees that I use for my daily scalping. Also a $20,000 bonus depending on how much you deposit and trade. Let's dive right in. Here I have listed 6 rules that you need to follow to apply to this trading strategy. The first rule is you want to use the fourth option over here where it says long and short position. Okay, for the purpose of the bull market and the momentum that we're currently experiencing, you are going to select the long position and it will bring up a tool that looks something like this. This is the most important tool that you need to use to become a successful day trader. This tool will show you how much risk you are applying by entering a trade. The middle line is what I call the why line. Why are you entering the trade and where are you entering the trade? Very important. You need to know why you are entering a trade. Okay. And then the last line here is how much profit are you going to make, or where do you plan to take profits from the trade that you are entering? Okay. You need to make friends with this little tool over here. I cannot stress to you how important this tool is, and I see many traders liquidating their account, losing big amounts of money because they don't do the hard work, they don't follow, and they are not consistent with their rules. This then comes down to the second rule: plan your trades. You have to plan your trades, and we will go through the strategy where I'll show you how do you plan your trades, where do you put your risk, and where do you plan to take profits. Okay, it is important that you plan your trade before you just enter blindly and hope for the best. You have to have a plan, and the plan includes knowing where to put your risk and how to manage your risk when you see momentum moving in your favor. Why am I entering the trade? And the profit area that I've just mentioned, where am I going to take profits? I've seen many traders not knowing where to take profits, and then they leave the position open where greed kicks in, only for price to turn around and stop them out after they've been in significant profits already. Right. The third rule: use low leverage. I recommend, and this is my personal opinion, when I started out, use maximum 2x leverage and low capital. You do not want to risk more than 10% of your portfolio, and even less than that is better. Starting out, practicing the strategy until you get it right. Okay, the fourth rule that I have listed over here is stay consistent. Do not break the first rules where you stop planning your trades, where you start risking more because you feel that you are getting too confident. The market is here to humble you. You need to stay consistent. If your rule is I only deploy 10% of my capital for each trade and I never go over 2x leverage, and I also never risk more than 1% loss of my portfolio, right? You can see risk management here is at 1%. The rule needs to be I never lose more than 1% of this trade that I'm entering. I know why I'm entering and I know exactly where I'm going to take profit. I always use the same amount of capital regardless of what the market is showing me. You are staying consistent. A consistent trader makes profit. It is when you start getting greedy and fearful, risking a little bit less the next time, risking a lot more the next time. When you get confident, that is when you break your consistency. Often you will find that your account also bleeds out. The next rule is be patient. Be patient for the trade to play out. Be patient for the trend line to form. Be patient before you place your entry. Wait for the price action to give you what you need to place the successful trade. Don't force a trade. Okay, be patient. Sit on your hands when you don't know what to do. Don't force a trade. The trade will come to you. Every day presents new opportunities, and you're not going to miss out by having FOMO or trying to catch falling knives. Right, then also the last rule that I have over here is please go and backtest your strategy. After I've shown you this strategy, go and use your reverse tool here on TradingView where it says replay. Okay, when you click on that button, what it does is you can go and reverse the price action and erase it up until a point, and then you'll see a play button, and here you can increase the speed or decrease the speed, and you can go and replay the price action, reverse the price maybe 2 or 3 months back where you can't really remember what happened with the price of Bitcoin, and let the price action play out, where you can go and practice your trading strategy using your long tool, knowing why you're entering, taking profits, and your risk management before you go and play with actual cash on the live account. Right, let's get into the simplest trading strategy that I use. Looking at the price of Bitcoin over here, I can already see plenty of opportunities where I could have applied my one-line trading strategy. And this strategy seems too simple for most to believe that it's effective, but I can promise you, when you stick to the rules, you are consistent, this trading strategy can be very powerful. The second thing I want to mention is this trading strategy can also be applied to any time frame, and depending on how much time you have available on your hands, you can go and trade a higher time frame like the 4-hour, for example, or the daily chart, or the 12-hour, or if you only want to place 3 or 4 or 5 trades a year, you could even go as far as the weekly time frame over here. But for today's purposes, I'm just going to go and stick here to the 15-minute time frame. Right, let's go back here on the price of Bitcoin, and I just want to show you guys what do I mean by how simple this trading strategy is. Right, here you can see I've already prepared a couple of trend lines, just waiting for the chart to load up. And all of these trend lines down here is how many times you could have placed successful trades to the upside. Let's zoom in here. The first time is the price action that we had here during the 5th of Feb 2024. And here you can see I apply my one-line trend strategy. Some of the rules that you need to apply is it needs to have at least 2 touches, as you can see over here. Let me just zoom in here. This one-line trend strategy has to have at least 2 touches over here. Here you can see 1, 2, and then here by the 3rd touch, we had the breakout. When you have extreme bullish momentum to the upside, you will often find that you only have 2 touches, and then on the 3rd touch, you have the breakout. The more touches you have, I found, the more aggressive the breakout is to the upside. Okay, so here, you could have placed this trade where you put a one-line trend strategy, making sure that I place my trend line on top of the wicks, and that prevents fake outs to the top as well, where I've seen traders will put their trend line inside the body of the candle over there, and then you have all these little fake outs to the upside, entering and getting stopped out multiple times before the real move plays out. So what I've learned is that place your trend line on top of the wicks. You might be a little bit late for the breakout, but you get then a more confirmed breakout to the upside. So for this trade, how the rule works is you draw your trend, you then go and you add, like I've said, your long tool. I am entering this trade over here. The reason I'm entering it, the why I'm entering it, is because I'm seeing a breakout to the upside, okay? And we've had a long consolidation to the side. The risk management is you always place your stop below the recent low, which is over here, and you're always targeting the pivots to the left as profit-taking areas. Okay, so the highest point I want to take profit is here by the highs. I'm entering over here, and I have a risk to reward of 2 to 1. You always want to make sure that your risk to reward is never less than 2 to 1. The more the better. I prefer a 3 to 1 risk to reward as a minimum trade, and I will often sit on my hands to wait for that opportunity to play out. But nonetheless, for me, a minimum trade 2 to 1 risk to reward makes it worth it. Okay, and then here you can see the price broke out. Okay, you were protected. You know exactly how much you're risking. Please ensure that you never lose more than 1% of your capital during each trade. So here you can see that the risk I'm taking on here is, let's say, 0.5%. Okay, so if I'm applying 0.5% risk to this trade and I'm not allowed to lose more than 1% of my capital, it means that you can trade your portfolio at 2x. And if you get stopped out, you will then lose 1% of your capital. That is usually the rule that I use to determine my leverage. But as I mentioned in the beginning of this video, only use 10% of your capital, okay? Make sure that you do not lose more than 1% of that 10% of the capital that you are using. So you need to do some homework and calculations before you enter the trade. Right, you target the highs, and this is exactly how it played out. You came up, you claimed the highs, TP1 in the bag. You can always leave some of the position open. So you can, for example, take 80% of the profits and leave 20% of the profits open here in case we move to higher levels, which is exactly what happened over here. This is an excellent bull market strategy, always expecting higher prices to come, where you take profits where you're supposed to take profits, you leave some of your position open for higher prices. And here you can see another trend line. And when I zoom into this little trend over here, you can see perfectly what I've just mentioned is you had 2 touches and then you had the breakout to the upside. Okay, but the risk to reward on this trade was not worth it for me, because when I then drag my tool up, this is where you enter. You have to take your profits at the highs and your risk management needs to be all the way down here. The risk to reward did not make sense for me, and that's why you have to be patient for the trades. Let's move on to the next trade. Here you can see also nice little consolidation area that's forming over here, and then 1, 2, and on the third touch you have the breakout to the upside. The one thing that I do want to highlight over here is that even when you have massive momentum here to the upside, you miss the breakout, prices moving up. You do not have to FOMO into the trade. You sit on your hands and you wait for the price to consolidate, because when price consolidates, that's where you can apply your one-line trend strategy to play the breakout to the upside. Here you can see also it shot up again, and true as Bob, you formed a nice little trend here to the downside where you apply your risk. You know where you're entering, okay? You know where to take profits and you know how to apply your risk management. Often what I do in these trades as well is when I see massive bullish momentum to the upside and I play the breakout, as soon as I'm starting to get into profits and my count is showing me I'm in the green, I immediately move my stop loss to break even. Okay, I do not want to lose any capital, and if I get stopped out and we break out again, I will re-enter the trade, but at least I get stopped out with no loss. And here you can see the momentum just continued to the upside, playing breakout after breakout after breakout. And so the price just moved up and I benefited from all these breakouts to the upside with significant profits in the bag. The one thing I also wanted to highlight is please remember that no trading strategy is 100% successful and there will be losses along the way. That is why risk management is so important. If you are losing less than what you are making from a profit perspective, well, I think that explains itself. That is how you become a successful day trader. When this strategy is applied and you are consistently following the rules and you are patient, you will see that there are way more winning trades than losing trades. For example, this trade over here, you played the breakout, you were targeting the highs over here, right, with your stop loss below the low, and you can see you were stopped out over here. So not every single trade is successful, but as you can see, as I'm following the price action over here, where you are entering the breakout, stop below the low, in the majority of the trades over here, you would have had significant winning trades compared to the losing trades, just playing breakout after breakout. And here you can see this is where you need to be patient. You could have waited for this breakout here to the downside, where we didn't claim the high, but then we formed a larger trend. And you know, like I've said, the bigger the trend, the bigger the breakout. Look what happened after this larger consolidation over here. We had massive momentum here to the upside, forming yet again another trend and another breakout to the upside. So following this simple one-line trading strategy, you can see that there are many successful trades here to the upside, and it's when price starts consolidating that things becomes a little bit more tricky and you have to be more patient, but nonetheless it is still the simplest one-line trading strategy that I still use today. Thanks for watching. Now I've shared with you my simplest trading strategy that I use on a daily basis to be a successful, profitable day trader. To start trading on one of my favorite exchanges and to show you exactly how it's done, please go check out this video right now. Until the next one, cheers for now.